Joining us now on the Financial Mentor is Frank Versace. Frank is the Director of Clients and Partners at a new Australian bank called Judo Bank, formerly Judo Capital. Frank, thanks for joining us.
Thanks, David. Great to be here.
So let's just get started a little bit on what a new bank is. What's Judo Capital?
So Judo, we're the newest kid on the banking block, I suppose. APRA's just issued us our banking license. We were in the market prior to that as a dedicated SME lender. We're now a dedicated SME bank, and I suppose our whole mantra is that we're purpose-built for SMEs looking to reintroduce the empowered relationship manager who can deal with customer requests through the application of common sense rather than the application of policy, I suppose is the nutshell.
So would it be fair to say, those of us who have gone to banks and we get the computer says no, or the checklist wasn't filled out properly, we shouldn't be having that experience with you?
Spot on. I think from a banker's perspective, that was just as frustrating for us. The guys on the inside of the banks who took our profession really seriously, who were just as frustrated by the evolution of the banks towards this sort of algorithmic computer decisioning as what the customers were on the outside. So absolutely, you will never get a computer says no response from a banker at Judo.
We're talking about funding business growth today, and banks become a really critical part of that relationship. There are also some horror stories where things don't go well. Can you just sort of share your experience with how, throughout your banking career, the bank has really supported businesses, or maybe at times has failed businesses?
Yeah, so I think that the banking story has been one that's been evolving over the last 20 or 30 years, I suppose, with the advent of computer decisioning, as we mentioned, but also I think what's happened concurrently with that is this obsession that banks have had with driving down expenses, and what that has meant to a large extent has been the de-skilling of the frontline banker, who has now become more focused on the sales metric than he has on the customer problem. And in the absence of a banker who's adequately able to represent their customer in front of whatever decision-making process that bank has, whether it's a computer algorithm or one of the mythical credit managers that customers never seem to get the opportunity to meet, you have a system that's been sort of become more and more commoditized and more dehumanized, and the frontline relationship force that has become less and less sort of qualified to represent the customer in those circumstances. And so those two things coming together have led to some really horrendous customer outcomes, I think, and some hugely frustrated customer circumstances where you and I'm sure this will be a common story for a lot of your listeners, where for whatever reason the customer trips over one of the series of questions that you tend to get asked by the major banks, whether it be a tax arrears, whether it's a wrinkle in your credit history, whether it's you don't have 2 consecutive years of profitable trading for a really good reason, or whether you don't have residential security underpinning the transaction. But fundamentally, there's a really great business operated by a really great business operator that in years gone by would have been a completely bankable proposition, but in this day and age, for all the reasons we've mentioned, customers completely struggle.
Can you tell us a story of, since you joined Judo, what's been one of the great customer stories you've held where Judo's sort of matched the type of funding that you can give to the need of the business?
Yeah, so I think, and this is one that's been really close to my heart throughout my career, and we've talked about it in other forums, David. But the issue of succession planning to me is one that is just becoming a really critical aspect of what the Australian business landscape looks like. We still have an enormous amount of business value that's tied up with the baby boomers, and the baby boomers are approaching the time in their lives where they would like to transition that wealth to the next generation. And what we've seen is banks completely sort of unhelpful in the customer aspiration to transition that wealth. And I think one of the deals I'm most proud of that we've completed at Judo is a succession planning transaction where we're able to lean on the goodwill of the business um, to facilitate an orderly transition of business wealth from one generation to the next. And what that means, and what that meant in this particular circumstance was that we had the exiting business owner who didn't lob up on our doorstep the day he wanted to exit the business, as you shouldn't, and as all good advisors would recommend against. They approached us to transition the wealth over a 3-year period. The acquiring party in this case didn't have residential property values sufficient to cover the amount of debt they were looking to take on to facilitate the business purchase, and so we were able to lean on the goodwill of the business, understanding that the existing proprietor was going to facilitate the transaction over 3 years, as we said, was going to remain in the business, transition all the relationships, and so we were able to take quite an aggressive position in what in modern day finance terms. But we're quite comfortable, given the quality of the people involved, the fact that the principal dependency has largely been dealt with by the exiting partner staying involved, and the calibre of the people entering.
It's an amazing story to hear you funding that huge part that's needed in the Australian story, and that sort of, it's not really the tail end of the business though, because often at succession, new management, new owners come in. It's another growth point, isn't it?
Absolutely, and it can be a point of inflection for a business in a risk sense as well, and that's a critical thing to consider for the people exiting and the people entering. But as you say, it's also a huge area of opportunity where, with the injection of fresh ideas, and I think what has been missing from this dynamic, definitely over the last 10 years, has been the availability of liquidity that enables new partners to enter the business. Generally, people are capped at the value of their home in terms of their borrowing capacity, and I think what we want to unlock is the value of Australian businesses. We also need to have a deep understanding of the risks inherent in them, but that in itself has become a dying art.
Frank, thank you very much for coming and spending some time with us in the Financial Mentor. A lot of business owners listening out there. Do you have any final messages?
No, so I just think that we acknowledge as bankers that the finance industry has probably let the small business community down over the last 10 to 20 years. It's what we're at Judo really passionate about, giving small business owners a fair go, recognising the incredible work they do as part of the Australian economy, and the role that finance plays in unleashing that potential. And so we're really excited by what we're doing, and we'd be more than happy to speak to any of your listeners or any of your listeners' friends about what that might mean.
Thanks, Frank.
Thanks, David.